Today, we're diving into some exciting updates on NIO. Specifically, we'll be taking a closer look at the latest delivery numbers and analyzing their significance. While they may seem impressive at first glance, we need to discuss a few key aspects. But before we get into that, there's some breaking news related to Tesla and a potential price war in the EV market. It's a significant development that involves various electric vehicle companies finding common ground. So, stick around as we break it all down for you. Now, let's start with a brief technical update on NIO. This will give you a better understanding of the current chart and its potential future direction. When we examine NIO's daily time frame, we observe the price gradually converging on the 13 EMA or exponential moving average. Additionally, the RSI or relative strength index has dipped below its moving average. In situations like this, it's important to note that we're in a 50-50 zone. When there are declines, those days present a promising buying opportunity for those of you who believe in the company's long-term prospects. Just a quick reminder, these videos aren't intended as buy recommendations. Instead, they provide additional information about stocks you're already interested in, which you might not find elsewhere. Now, let's switch gears to examine the 4-hour time frame, where things look slightly different. NIO has broken through the 13 EMA, as well as the 24 EMA, and we're currently eyeing the 48 EMA. Currently, we're anticipating a downside on their EMA. However, we may retest the 13 EMA on the upside before resuming the downward trend. We can expect some support around the 13 EMA on the daily time frame, roughly at 9.36. As of July 12th, NIO is trading at 11.16. If you believe in this company's long-term potential, dollar cost averaging can be your ally. Considering all the positive developments surrounding NIO, including its growth, new vehicle launches, and the excitement generated by its innovative battery swapping network, it's highly likely that NIO will continue to make a significant impact in the electric vehicle industry. Now, let's delve into the first piece of news about NIO that holds significant importance for the upcoming months. There's a specific aspect here that you all need to grasp before we discuss the delivery numbers. Recently, Tesla has reached a truce with its Chinese counterparts to prevent further escalation of the electric vehicle price war. This development comes just a month after Elon Musk met with top Chinese officials, praised the country's technological advancements, and visited Tesla's Shanghai factory. As the world's wealthiest individual, Musk was one of the 16 executives from electric vehicle companies who signed this truce, aiming to establish stability in the world's largest electric vehicle market. Now we have 4 key points to which each automaker has committed in order to curb the price war. First, being able to adhere to industry rules and regulations. All participants will follow the guidelines and regulations set by the industry, ensuring a fair, competitive environment. They pledge not to disrupt the market's fair competition order by employing abnormal pricing strategies. Second, having responsible marketing practices. Emphasis will be placed on truthful marketing methods, avoiding exaggeration or false marketing that may mislead customers or seek attention solely for the purpose of customer acquisition. Third, prioritizing quality. Each automaker will prioritize product quality and services that cater to people's needs for a better quality of life. And lastly, social responsibility. Active participation in fulfilling social responsibility, contributing to stabilizing economic growth, increasing confidence, and preventing risks. The collaboration will be encouraged to make a positive contribution to national economic growth. Now, let's focus on an interesting aspect highlighted in the provided image. As you can see, car companies in China, including Dongfeng, are currently slashing prices amidst intensified competition. However, looking at NIO and Li Auto, they have yet to engage in price cuts. This is a crucial metric to consider because other electric vehicle manufacturers are attracting customers based on price rather than value and quality. NIO, on the other hand, is maintaining its stance by not resorting to such price reductions. But before we continue, we want to thank you for watching this far. Now, let's shift our attention to NIO's delivery numbers. Despite not resorting to price cuts, NIO has managed to maintain a relatively strong position in the market, as we'll see in just a moment. When we consider the situation with Tesla and other electric vehicle companies vying for market share, it's encouraging to see that NIO is not engaging in a price war. This puts the focus on the value proposition each company offers to customers at their respective price points. Looking at the chart and NIO's delivery numbers, it appears that NIO is successfully delivering on its value proposition, which is a positive sign for its long-term prospects. Examining the delivery data from a broader perspective, it's essential to consider the overall trend. While NIO's deliveries increased by 74% from May to June, it's crucial to compare it to previous years. In June 2022, NIO delivered around 12,961 vehicles, while in June 2023, they delivered 10,707 vehicles. This indicates a year-over-year decrease of approximately 17.4%. However, if we analyze the trend over the year, NIO had a strong performance in February, March, and April, with a slight decline in May. Overall, NIO is on track for a robust year. On July 1st, NIO released their June delivery data, reporting 10,707 electric vehicles delivered, a 74% increase compared to the previous month. Although the final result fell within the mid to lower range of the company's delivery guidance of 10,187 to 12,187 cars for June, it's worth noting that NIO isn't actively participating in the price war observed among other electric vehicle companies. Despite this, NIO's ability to deliver a significant number of vehicles is a positive sign. As we enter the second half of the year, NIO has the potential to gain more market share, particularly as price becomes less of a determining factor for consumers. The fact that NIO focuses on delivering value rather than engaging in price gouging gives them a competitive advantage. This sets the stage for NIO, along with Li Auto, Tesla, and other brands, to compete based on factors beyond price alone when attracting customers. Another factor to consider is the current economic situation. We are currently in a recession, and the market is not experiencing hypergrowth. As we move into 2024 and 2025, and the economy begins to stabilize, with lower interest rates and increased disposable income for consumers, the value proposition of electric vehicles will become even more crucial. Customers will seek out the options that provide the most value to them. Will it be Tesla? Will it be NIO? Or perhaps XPeng or Li Auto? It's difficult to say at this point. However, the developments we've discussed today, mainly NIO's focus on value and not engaging in price wars, level the playing field among electric vehicle companies. It sets the stage for a more comprehensive assessment of which company can truly deliver on their value proposition. Do you believe NIO will come out on top? Or do you think another company like Tesla will prevail? We'd love to hear your opinion. Let us know about it in the comment section. With that, we'll wrap up this video. If you enjoyed it, make sure to hit the like and share button below. Thank you for watching. This is Nate, and I'll see you in the next one. Will NIO dominate the EV industry in 2024? Check out our insights in this next video.